The Property Pod. Welcome to The Property Pod with Moneyweb. The property sector is an ever-changing sector. And in this podcast series, your host, Suren Naidu, chats to movers and shakers in the property industry.
Hello and welcome to The Property Pod, South Africa's premier property investor podcast. It's our milestone 100th episode. My name is Suren Naidu, and on this Moneyweb weekly show, we gain insider insights from leading executives, analysts, developers, and entrepreneurs in South Africa's expansive property industry. On this week's podcast, we're going regional and are speaking to a commercial property professional who has worked in Zimbabwe, his home country, as well as in South Africa and a number of SADC countries over the years. He is Kura Chihota, who has some 30 years of experience in the real estate sector, both on the listed and unlisted sides. Currently, he is regional property consultant at EXP South Africa. Kura, welcome to the Property Pod on our 100th episode, Nahal.
Suren, congratulations on getting to 100. You know, getting to 100 of anything shows determination, but you're putting out great information and the market loves it. So on it, I follow your podcast. I'm a podcast guy. And to get to do the number 100, I'm really grateful. Thank you so much for the opportunity.
Thanks for the kudos there. You have been in the property game for a while, so I'm sure you have some valuable insights, regional insights as it were. Since Zimbabwe is where you're from, can you share some insight on that market broadly? I know it's a very broad question, but it seems there's a bit happening there despite Zimbabwe's well-reported economic challenges.
Yeah, so let's go a little bit back into history. And when you say I've been in the game a while, it makes me feel an old man to say that I've been doing it for 30 years, but be that as it may. So Zimbabwe, as most people observing from outside would know and remember, we've gone through crazy hyperinflation. We get laughed at for numbers with 27 zeros. So you imagine in an economy where you have financial assets, the likes of Old Mutual and other pension funds are their names that you would recognize. So if you had financial assets, your retirement annuity or your pension fund invested in those, when the dollar blew out, when the Zimbabwe dollar version 1.0 blew out, you had nothing. So against that backdrop, if you had a title deed and you had real estate, you had an invested funded position, if you had bought it on a mortgage, now that mortgage evaporated, you're left with a cold, hard capital asset that remains. And that's been increasingly valuable. Then because it now trades exclusively in US dollars, we now have a market that circulates US dollars amongst itself. So what you get for 100,000 US dollars in Zim can't be compared to what goes for 1.8 down here in South Africa. So we've just seen that real estate, because of its hard nature, its enduring nature, and its ability to attract US dollars, has caused capital to flow to it. And our professional property managers, pension funds, provident funds, insurance companies, 55% of their value is actually stored in real estate. So that gives us an over-concentration in the asset class. Some people wonder it's a bubble, but I think it's a natural reaction to the only asset class that has endured at this time through these economic circumstances. And for love of money, no one is going to let go of that asset in anything but US dollars.
Very fascinating insights there on the Zim property market. How much is actually going in there? You talking more from a Zimbabwean perspective. Zimbabwe still is a well-known tourist destination. In fact, close to Victoria Falls, there's a secondary stock exchange planned, or if not already commenced trading.
It's up and running?
Yeah, so there is a lot happening. Who are investing in the property market? Is it mainly Zimbabweans?
This stage, it's mainly Zimbabweans. We do have interest from outside parties, be it Chinese, be it some money out of Eastern Europe. But it's the money that's moving within the country is Zimbabwean dollars because, as I said, you bought an asset in Zimbabwe dollars with debt. That debt evaporated away. Now you've just got US dollars and US dollar trading. So people are moving it from one pocket to another. Some guys have made money in mining or commodities or what have you, and they're looking for a store of value. So at a household level, if you don't already own the house, you've probably bought a stand and you're adding to that stand over time incrementally because we don't have active mortgage markets. We've got less than 5,000 registered mortgages active in in the country. So people are using it to store value because you can't put your money and expect a return in US dollars from a pension fund or any other financial product. So it's locals investing locally.
I might catch you off guard here in the context of what you're saying, that it's quite an active market in Zimbabwe, believe it or not. Can you give us some insight on some big projects that we may not be aware of that's taking place in Zimbabwe at the moment, whether it's commercial or residential?
Okay, so for trackability, we have last year we saw the listing of a company called Westprop. They're property developers. They have an ambitious target to build over 1 billion bricks over the lifetime of their projects. So they've got a number of projects, a $200 million book that they've listed on the Victoria Falls Stock Exchange, and they're developing projects. But you have a number of large but unlisted property developers, more likely on the land development side, because from an affordability and access point of view, selling a stand for $20,000, $30,000, $40,000 is a lot more realizable and achievable than selling apartments for $100,000, $200,000. But then you've got smaller players like Turnberry property developers who do bespoke clusters within towns. So there are players who are there, and it's really trying to match capital with capital appetite. And the capital appetite is small inflows, be it because salaries or most of Zimbabwe's economy is now 80% dollar-based. People's salaries are coming in dollars, so their savings are trying to be put in dollars. So those are ending up at a household level, buying a stand and building up something, or at an institutional level, they're putting it in development projects that are a bit bigger. We've got Tigere Real Estate Investment Trust listed. That's been active on the market. I think the share price we bought on IPO about a year ago at 28 Zimbabwe dollars. The last time I checked my stock position, I think we're trading at about 600 Zimbabwe dollars. So it's horses for courses, where you're trying to find and preserve value as it comes in. You need to find an appropriate investment to drip your money into.
Fantastic insights there, Kura. Clearly, you're a proponent of Zimbabwe. You're also a proponent of the broader SADC and South African real estate markets. Can you share a little bit about your background, how you got into property and what excites you about the real estate game in this region of the world?
Funny, you bring it full circle. I'm standing in Braamfontein at the very moment, and this is where I started. I came down in 1994 as a student to do a BCom in real estate at Wits. I got into the property game by listening to my mom, God rest her soul. She said, look, I think you should get into property. A lady she worked with, or a lady she went to church with, her husband was a property valuer. So literally the day I walked out of school, I walked into the property profession. I did that for about 3 years from finishing school until I came to South Africa. And South Africa, 1994, just a golden land of opportunity. I took a gap. I started working for a commercial property firm, making phone calls, cold calls, phoning up people, trying to get them to buy real estate or rent offices. And from that, I became a broker in the CBD, and the bug bit me from there. From broking in the CBD, I then moved to Durban and got more into property asset management, where the company I was with was putting together one of the early consolidated, eventually they became REITs, but property loan stocks at that time. And just integrating the capital markets with the real estate markets just grabbed my heart. And I'm grateful to say I've served on a number of boards here in South Africa, Johannesburg Housing Company, Fortress Income Fund, the REIT, Putprop, the REIT. So it's just been, property has been in my blood. Then I went back home when the second largest portfolio manager there, the National Social Security Authority, called me up and they said, look, in 2016, come back home and deploy your skills back home. So I answered that call. So I've always been in real estate. It's in me. I can't dilute it or run away from it.
Kura, you are at EXP currently, but you also were CEO of Leapfrog for over a decade, according to your CV. Just on that note, what are your thoughts on the residential property market in the broader region? It, like other sectors of the property market, is under significant pressure due to interest rates. It is quite broad, but the demand for housing in Africa is still huge. So I'm sure you have some comments around that.
Indeed. So I was Leapfrog. Let me not overstate my position. I was an executive director and shareholder, and I ran the commercial division. So I was the CEO of the commercial division, not the whole group, but invested in the whole group. So EXP has just been a godsend where I can now internationally operate with over 100,000 colleagues across the world on a virtual platform. So I've got access to IP while sitting, my desk is wherever I've got internet connection, my phone and laptop can connect. So I'm off to Kenya next month for a housing finance symposium where it's really trying to crack that nugget. So everywhere outside of Zimbabwe, housing in Africa is a very credit-dependent commodity. And where interest rates are and trying to bridge the gap of low incomes versus high capital values is going to be the challenge of our lifetime. We're all urbanizing as quicker as we can, and that's going to be the state of Africa, highly urbanized. So the state of the residential market, we've seen South Africa, you sit on the data and you talk to the Lightstones and what have you. We are flat on capital growth. The yields have been under pressure because costs are rising faster than income is rising. So that's difficult. I was in Zambia last year, and the affordability where interest rates are about 24% makes it very difficult for you to finance a long-term asset. It's very difficult there. In Botswana, I think it's trying to raise a quality book. There are products and new developers are bringing across some really interesting product at the $1 million, $1.5 million kind of pooler mark. But to get the qualified people in the numbers that make that development, where you put in 40, 50 units at one go, to get that number of people qualifying and to have the banks be happy with the credit risk on over-investing in a sectional title scheme becomes a bit of a challenge. So it's horses for courses in the region, but Zimbabwe stands out in that we're not financed. So people are doing installment sales or buying for cash, or diaspora are raising money wherever they are and then sending that money to Zim to do the purchases. So it's a sprinkling, but in broad, the residential is not wildly yielding right now. I'd say the shining points are kind of South African township, where you're doing backroom developments or inner city developments, which are trading at about 12, 13, 14% yields. I think that's where the residential activity is for now.
Thanks for that, Kura. Are there opportunities investing in African real estate? I'm talking ex-South Africa now. This is a largely South African-focused podcast, but having you on the pod brings it a regional flair, as it were. The reason I ask about this is because I might have a little bit of a South African bias here, but a lot of South African companies in particular have had their fingers burnt in Africa. Hyprop and Attack highlighted this, particularly Hyprop in their results recently with their investments in Ghana, for example.
Resilient as well.
Resilient, yeah. As you mentioned. I also threw in ShopRite here because they had to buy the resilient portfolio last week for R1. But Hyprop and Attack's links rather to At Africa, which is no longer operating as far as I understand. Also, Liberty had a REIT in Kenya at some stage, or they were involved in. There are some issues around currency and problems around South African companies getting revenue out of some of these countries. Can you share some insights on that? I know it's more of a commercial property question.
Sure. So I think that it's just like at national level, when we've bought Euro bonds or something like that, loans in hard currency, but in a local country, we've created a noose that hangs around our necks. So all of those deals that you're talking about were probably originated out of the likes of Standard Bank or RMB, who went aggressively, and in a commodity upswing and boom, it looked easy to say, oh, look, the dollars are there. If you look at Ghana, they discovered oil and Tema was flying and everything was looking great. Nigeria, you've gone in and you say, look, rising oil prices, this looks really great. And the dollars were flowing. Then you can take them by name, Nigeria, Ghana, Zambia, where when the commodity price turns and the balance of payments turn, then you now get a rationing on the forex, and then you sit at the back of the queue to get access to that forex to remit it back home. MTN can write a dissertation on how painful that is. They've been through this a couple of times. So if we borrow in US dollars and expect the remittance in the local currency or at whatever exchange rate, I think we've created an inherent weakness in there. The best thing I would imagine is to have a matching where you raise local money in local currency, and then you've got that kind of matching. So whatever is happening locally, the rates may go up and down, and you can have monetary interventions that kind of protect those flows. But if you've pegged it to the US dollar, I think you're going to have a challenge in an African economy that's so dependent on commodity exports.
What would you say are the most exciting or potentially lucrative subsector in the sub-Saharan property market, again, ex-South Africa?
So I think my operating model is property development with as short a cash cycle as possible. You put in for land, you can speak to a landowner who's got a funded equity position. You bring in capital and yellow material and some funding to put some servicing in to meet the subdivision and regulatory requirements. That is going to have a quicker cash cycle. So you've put in dollars and then you're selling the product for dollars. You may be doing it off terms. You may get somebody to pick up a mortgage book after you. But I see that as being low-hanging fruit, given the overwhelming nature of Africans to be moving into urban centers and looking for that El Dorado, that piece of ground. It's 200 square meters in, what's it called? Mia something, Lusaka, the name is escaping me, or Harare, or any of the smaller towns. I think there's always a lot of focus, and it's easier for you and I to fly into Lusaka and look at opportunities. But going to the Ndolas and the Kitwes, we're having urbanization in those smaller towns, and the aspirations are real. We've all got smartphones, we all watch DSTV, and we're all aspirational. We want the things that other people have. And I see that as a dominating trend, supporting why people are leaving a rural lifestyle and coming into an urban lifestyle. And to provide an affordable product to them is where there are going to be long-term returns for the investor who puts that up. But managing risk, you want to get in and you want to get out. In a year, if you've got your permitting in process, you should be able to start reaping a real dollar revenue off your expenditure.
Kura, you split your time between Zimbabwe and South Africa largely, and other SADC countries. Anything big worth mentioning that you're going to get involved in on the property front, development front? Any exciting projects you'd like to highlight before you go?
They're on the pot and they're boiling. Nothing to unveil right now, but land development in Zimbabwe, and then affordable housing here in South Africa, to me just seem like those are the projects that are going to take me into my leave days.
Kura, thanks so much for your time on the podcast today. That was Kura Chihota, regional property consultant at EXP South Africa and regional expert on the property market in Southern Africa.
Thanks for listening to the Moneyweb Property Pod with Suren Naidu. To listen to more episodes, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates. Follow Suren on Twitter at Suren Naidu for more of his property industry content and other business stories.